Hi, you're listening to What's the Deal, our investment banking series here on JP Morgan's Making Sense podcast. I'm Ben Thompson, head of EMEA Leveraged Finance Capital Markets at JP Morgan. Today, we'll be discussing the dynamic world of leveraged finance with our guest and friend Jonathan Butler, head of European Leveraged Finance and co-head of Global High Yield Strategy at PGIM Fixed Income. Before we start our conversation, I want to highlight that the annual JP Morgan European High Yield and Leveraged Finance Conference is just around the corner, taking place from September 4th to 6th in London. This event is a key gathering for issuers, borrowers, investors, and lenders to discuss the forces and trends affecting the debt capital markets. PGIM is planning to send more than a dozen people this year, emphasizing the importance of this conference in the leveraged finance space. Jonathan, welcome to the podcast. It's great to have you.
Thank you for having me. It's great to be here.
JB, it's fascinating to look back at the changes in the leveraged finance market over the years, and we've both been involved in that community for quite some time. Could you share with our listeners a bit about PGIM today, your career path, and how your role in PGIM has evolved in response to the shifting market dynamics?
Yeah, so unfortunately, I was looking at a presentation today and realized I've been doing 30 years in leveraged finance now. But I've been with PGIM for over 19 years, so coming up for 2 decades. I set up the London office, which was the start of our European operations in 2005. And obviously that office has grown through time. And today we're one of the larger European leveraged finance players. And then for PGIM, we've also grown our leveraged finance platform to be one of the larger global players. We have approximately $100 billion invested across both high yield bonds and leveraged loans in PGIM Fixed Income. So obviously being part of that journey as we've grown the business. In terms of where we've grown it, we've generally been very much focused on fundamental credit and then what we consider to be relative value, so finding best risk-adjusted returns within the leveraged finance space, obviously here in Europe, but also globally.
That's terrific. And obviously, with that size platform, you're going to have a very broad-based view of what's going on in the global capital markets and specifically the leveraged finance markets. And one of the things that we are focused on right now is geopolitical risks, which are always on the radar for the buy side. And with the ongoing tensions, particularly the conflicts in Ukraine and the Middle East, and with what could be a volatile U.S. election process, how are these types of global uncertainties shaping your portfolio strategies at PGIM, and what specific things are you most concerned about that are keeping you up at night?
Yeah, so we've been concerned about geopolitical risk ever since Russia invaded Ukraine, so over 2 years ago. That risk obviously is still there today and remains, particularly with Ukraine's incursion into Russia now. But if you then look at how the markets are pricing that in, and then also add in the tensions in the Middle East, and obviously the issues there are now approaching a 1-year anniversary. Again, markets are assuming that this is all going to get worked out, that there are going to be ceasefires, and that we end up in a situation where economically for market returns, we have a benign outcome. But that does remain concerning to us because there obviously are significant tails there. And again, in sort of wider geopolitical tension, obviously we still have trade competition between China and the West. And so that is still bubbling along as well. So there are significant tails. We feel that spreads are now at generally pretty close to all-time tights. August had some volatility. But with that backdrop, we're certainly not pricing in where we think tensions could get to in a tail scenario. And then there are obviously other risks going forwards that I think we're probably going to come on to talk about.
Yeah, well, you mentioned the August volatility, which was triggered by a number of factors, but top of mind was the reemergence of the concept of an economic slowdown in the U.S. And that has been a concern for buy-siders for some time, and it certainly came to the fore during the recent August market volatility. This also put the focus again on central bank rate policy. How do you see these forces playing out in the near term, and what implications could those have for the global leveraged finance market, especially from a European perspective?
So there is obviously risk of recession. We've had interest rate rises both in the US and Europe, which was designed to obviously help slow down the economy. And we're now seeing that come through. So I guess the million-dollar question is whether central banks have got it right and avoid recession and go into a soft landing, or do we continue to contract and go into a recession? So we don't have the data to know exactly where things will get to yet. But I think that we're likely to see obviously lower growth rates reducing from where they are now. I don't see that rates are going to go back to where they were before the hiking cycle began. So I think there is obviously change coming. There is risk of recession. Again, sort of how do we look at that? We're keen on basically playing to our strengths. We see ourselves as a strong fundamental credit picking institution. We earn most of our performance through security selection. So when you look at the index, it's far safer for us to be fairly close to home when it comes to the index. Don't take outsized bets. And obviously through security selection, that's how we're driving our returns. So very cognizant of geopolitical and recessionary risks that are on the horizon, but obviously sticking to our knitting and buying and owning the names that we know well, that we think will perform through any periods of volatility.
Sounds like a good strategy given everything that's going on. Changing direction a bit, there's been a lot of buzz around private credit or direct lending lately. How do you see the private credit / direct lending markets evolving, and what impact do you think it will have on the broader leveraged finance market?
So we've actually seen evolution of direct lending for many years. I mean, the first direct lenders were around pre-financial crisis, and as a product, it started growing post the financial crisis. There were many mid-market lenders at that point in time with bank-led syndicates that were being forced towards the direct lending market. But through time, we've seen direct lending morph into what I would describe as private credit, where we have club syndicates of unrated loans going to a number of institutions, but not to CLOs and what we've become known as the BSL, syndicated institutional loan market, but to an alternative form of lender. I think there are now 3 products in leveraged finance: high yield bonds, leveraged loans, and then whether you want to call it direct lending or private credit, but a third product type. And they're all tools that are available to borrowers as to what type of debt financing do they want to achieve. So it's a product that's here to stay. The pendulum probably swung towards private credit in 2022 and 23. I think that pendulum is swinging back towards the public markets this year. But any borrower is going to consider all 3 options, and it's something that we will be able to offer as an institution, along with what have been our more core traditional strategies of high yield and leverage loans.
Thanks for that. As we look ahead to the remainder of 2024 and into next year, what's your outlook overall for the leveraged finance market? And given some of the uncertainties we've discussed, what insights would you give to issuers and borrowers trying to navigate this changing environment?
So I think that where we look at spreads today, we're at the tighter end of where we've been for the last 15 plus years, so post the financial crisis and before. If we look at sort of what's created that, we've had a lack of supply in leveraged finance. We've also seen increased demand for fixed income, which includes high yield bonds and leveraged finance. So that's led to this tight spread environment. So if I'm an issuer, I'd be finding now a pretty interesting time to be investing. If we do go into a recession, if any of those geopolitical tails emerge, then spreads will widen. I think that now is an interesting period. For us as an investor, we have to be cautious around those tails. Therefore, we're looking to seek returns through relative value. So we're open to new issuance, and we'd welcome conversations with borrowers.
Fantastic. It's always great discussing these kind of topics with you, and I'm looking forward to continuing that conversation at the European High Yield and Leveraged Finance Conference. It's great that PGIM is sending so many people to the conference. And I guess I'd ask, from your perspective, what makes this conference an essential piece of the leveraged finance market fabric, and what are you hoping to take away from it this year?
Yeah, and I guess the first thing is obviously thank you, JP Morgan, for putting this conference on. It's a great conference. We send as many people of our team as possible, but having most of the European issuers in the market all available straight after the summer lull, it really means that our analyst team can get to meet with management teams, they can do one-on-ones, they can get an update on how businesses are performing, they can obviously quiz those teams on all of the top-down risks and concerns we have in the market around geopolitics, around recession, how are their order books, how's their current trading. So it's a fantastic way to get everyone back into gear and back up to speed. So the timing of the conference is perfect. And what you guys lay on in terms of the number of issuers that are there means it's an essential few days where the team are out the office and talking to issuers.
Thank you very much for joining us at the conference and also joining us here in advance. Just to recap, today we went through a number of key aspects of the leveraged finance market and the effect of a potential U.S. economic slowdown, global geopolitical risks, the evolving role of direct lending, and what's top of mind for market participants. We also got a glimpse into JP's outlook for the remainder of 2024 and into 2025, along with his insights for companies in the space. So, Jonathan, thank you for joining me today and sharing your insights, and we look forward to seeing you at the conference.
Oh, thank you, Ben.
And thank you to our listeners for tuning to another What's the Deal episode. We hope you enjoyed the conversation. I'm your host, Ben Thompson, and until next time, goodbye.
Thanks for listening to What's the Deal. If you've enjoyed this conversation, we hope you'll review, rate, and subscribe to JP Morgan's Making Sense to stay on top of the latest industry news and trends. Available on Apple Podcasts, Spotify, Google Podcasts, and YouTube. To stay ahead of the curve, sign up for JP Morgan's In Context newsletter, packed full of market views and expert insights delivered straight to you. To subscribe, just visit jpmorgan.com/in-context. This material was prepared by the Investment Banking Group of JP Morgan Securities, LLC, and not the firm's research department. It is for informational purposes only and is not intended as an offer or solicitation for the purchase, sale, or tender of any financial instrument.